Tonight, Wall Street has decided it is time to drive down Boeing shares and punish the company for what it perceives to be the misdeeds. Shares are down more than 4.5%. Analysts at Bank of America have warned the production problems with the 737 MAX could last much longer than expected. That has long-lasting implications for the company's business. Boeing suppliers are getting hit too. There are a number of factors that investors are watching tonight. Firstly, the order book. A leasing company in China has reportedly put an order for 100 737 MAXs on hold. The company says it still believes the aircraft is fundamentally safe. But that is now the issue as regards the 737 MAX, the long-range safety of the aircraft. So whilst Boeing sorts it out, there are production cuts. Boeing will now put out 42 737s each month instead of 52. One simple reason: they were running out of places to park the planes after they'd made them. So they're cutting back on the production. That market came after the markets closed on Friday. So some of today's announcement, of course, will be built into that. On flight cancellations, American Airlines is just one airline that's extended out into June. The world's largest airlines cancelling around 90 flights a day because they simply don't have the existing MAX aircraft and the ones that they were expecting to join the fleet over the next few weeks and months. The aviation expert Richard Aboulafia joins me now, the Vice President of Analysis at the Teal Group. It's worth pointing out there, isn't it? Boeing rebounds quite often after falls, but this one, what is the fall based on? I mean, Boeing's not going out of business. So what is this fall, this current fall based on?
Well, I think it's just the impact of this hugely important program. You know, the 737 last year was about 27% of company revenues. And it's a very profitable, very known program up until now, until these tragedies. So they'd gotten really good at converting operating cash flow into dividends and buybacks, and investors like that a lot because, frankly, this looks like a program, it still does look like it, for a program for the long haul.
So this idea that there may be a fundamental design fault in the 737 MAX because of the positioning of the engines, of which you'll be familiar. They're higher, they're longer, and they're more powerful. That would be a completely different situation. At the moment, it's still believed Boeing can solve this issue with the software patch.
Yes, that's exactly right. And I don't think there are a whole lot of terribly credible voices in the industry, the engineering community, that believe that there's something fundamental about this that can't be sorted out. So much of the current sentiment is driven by this change in timing expectations of when regulators will agree that the fix has been sufficient to allow the planes to get back in the air. And as you mentioned, Bank of America Merrill Lynch went from a 3 to 6 month time horizon to 6 to 9 months today. And that seems to be the big needle mover.
So on a simple technical basis, never mind feeling and worries and extrapolations, but simply on a technical basis of earnings, the company will not bring in as much between now and whenever because it is, although it's delivering the other 737s, it's not delivering the MAXes.
Yeah, that's exactly right. And it's sort of noteworthy. Their principal long lead subcontractor, which is Spirit AeroSystems, they build the entire body of the plane. They're sticking with rate 52, the rate till they reduced it to 42 last Friday. That maybe they know something that we don't, or maybe they're just being optimistic. But that implies that this might not be a 6 to 9 month story because they wouldn't still stay at that rate if it were. It could be that it's merely a way to avoid a production logjam, and of course, a way of avoiding holding too much inventory, which certainly would happen if this extended.
If the plane, well, let's say just for the point of argument in this question, it is a 6 to 9 to 12 months. Would they just continue making the planes, parking them somewhere out in the desert on the basis that the fix is only software related? Therefore, the hardware being produced will be good, just as good when it's finally they're up in the air again.
Yeah, that's exactly right. You know, it's purely a software fix associated with training too. but nothing that is, speaks to the external lines or manufacturing makeup of the jet. So you'd park them. The real issue here is just production log jams coupled with holding way too much inventory, because at 52 per month, that's, of course, a lot of jets over 6 months.
Final question, toughest question of the interview. Does Boeing get blamed? Does the share price suffer? Does the company suffer if they get the planes back in the air, even though it is probably their responsibility for putting a plane in the air that was not fit for purpose?
Well, the aircraft itself, I really don't believe is flawed at all. And I don't think many people, if anybody in the industry and in the aerospace engineering community, believes is flawed. What you had is, well, 2 accidents, which involve, like any accidents, a chain of events. Now, the one common link in that chain of events is this MCAS system that can be fixed. There's going to be a lot of back and forth about who's to blame for the execution of the system and how it all happened. But at the end of the day, it's not just the sole cause of these disasters.
Richard, good to talk to you. We will talk more about this, if we may, in the future. I appreciate it.